I'm bullish on commodities in general and precious metals in particular, but I really been liking silver for a while because I think it has a big catch-up trade to gold. And I think that as the precious metals bull market broadens out beyond central banks, so central banks have been the big buyers of gold. But when the public really gets in, I think they're going to buy a lot of silver. And so that's going to create a lot of demand for an asset that's in scarce supply. And the silver gold ratio is very much in favor of buying silver. Silver is still very cheap historically. It's not cheap relative to dollars, right? Because it's at a record high. You know, it's above the double top from 50. But in terms of gold, how much silver you buy today for every ounce of gold, silver is very cheap.
Gold and silver investors. Something major is unfolding right now. Precious metals are holding levels we've never seen before. Silver has broken through a 40-year resistance line, and even big institutions like Morgan Stanley are urging investors to dump bonds and buy gold. Peter Schiff is now warning that a massive shift is coming, one where silver could explode in value as public demand finally joins central bank buying. He says the US dollar is entering a dangerous spiral. Bitcoin's digital gold story is breaking down, and most investors still have no idea what's coming next. In today's breakdown, we uncover Schiff's strongest message yet. What's really happening in the gold and silver markets right now, why the next move could be historic, and what it means for every investor watching this.
So I think that's going to be a metal to own. It's going to benefit from demand as a safe haven, as a monetary metal, but also real world demand, you know, for silver, which is used in a lot of things, especially related to, let's say, electric power and things like that. And so silver prices got to go up. And these silver mining stocks, I think, are very cheap. You know, we've got exposure to those in my gold fund. In fact, even one of my, I think my value fund even owns a little bit of a silver stock, just, you know, because we thought there was a lot of value in that sector. So I put it in the value fund. Well, the metals held up really well. I mean, gold is still above $4,000 an ounce. In fact, I'm pretty sure it's pretty close. I'll check it to being back above 4,100. It's 44,080. So it's, you know, it's holding above what would have been a record high, you know, like a month or two ago. And silver is above $51. So, I mean, silver is above the double top that was massive resistance going back to 1980. Yeah, I mean, silver is off its peak because silver got above 54 and gold got, you know, above 4,300. But the pullback hasn't taken us back very much. So I think the precious metals markets are in very good shape, fundamentally, technically. I think they're around their new support levels right here. Maybe, you know, better support's a bit lower, but they're close enough. So I think they've held up really well. In contrast to, you know, fool's gold, aka Bitcoin, has not held up well at all. In fact, earlier this morning, Bitcoin got below 91,000. Now, that's still a high price, but it's quite a bit below the 126,000 that it hit a few weeks back. So definitely in a bear market there. And in fact, in terms of gold, Bitcoin is off by 40% from its peak. That is a pretty serious bear market when you're down 40%. You know, you wouldn't know that by listening to all the hype in the mainstream media that Bitcoin is so deep in a bear market, but it is. Because I think the best way to measure the price of gold, the price of Bitcoin, is in terms of gold. Because it's being marketed throughout the world as digital gold, as an alternative to gold. So I think gold is the proper benchmark for Bitcoin, not the dollar, especially since a lot of people that own Bitcoin don't even live in the United States. So they don't really follow the dollar as much as they follow their own currency. But I think gold is a international commodity, and everybody kind of knows its price in their currency. So I think you should try to measure stocks that way. And if you do that, you know, the performance has been pretty bad in the U.S. We've lost about 70% of the value of the U.S. stock market in the past 25 years. That's not a good track record for equities.
Yeah, yeah, for sure. So just thinking about that, I mean, they oftentimes we hear Bitcoin being hard money, digital gold, and such, and right now it's still. I mean, even the tech stocks have been outperforming Bitcoin at least on the year.
Yeah.
And
Pretty much everything. I mean,
yeah,
Bitcoin, I think it's back in positive territory, but when Bitcoin was below 90,000, it was negative on the year.
yeah, yeah,
And that's against better than a 50% rise in gold during the year. So that is a huge underperformance on the part of Bitcoin relative to its principal rival, right? I mean, gold competes with Bitcoin if Bitcoin is a better version of gold. If it's digital gold, gold 2.0, then, you know, it's competing with gold. That's the position that it is being marketed to fulfill buy Bitcoin instead of gold. That's the whole selling pitch, and clearly, you know, that didn't work out very well in 2025.
yeah. So a 40% drop in an asset that is compared to gold, or it's called the digital gold. I mean, because thinking like if gold would have dropped 40% from its highs, I mean, it would have been in the 2000s, somewhere in the 2000s, right? But you know, Bitcoin to drop 40%, that's a significant drop for a asset that is supposed to be, you know, digital gold or safe haven and such. And it seems like, you know, the underlying belief, whether, you know, gold is a hard asset which has thousands of years of history versus Bitcoin, which, you know, has, you know, 17 years of history or whatnot. It seems like people are believing in gold being the safe haven asset.
Well, certainly central banks, they've been big buyers of gold as they've been divesting of dollars, which makes a lot of sense that, you know, given the trajectory of our debt, it's clearly unpayable. And either we default or we inflate. Either alternative is not good. And so central banks don't want to hold U.S. dollars. So what are they going to own instead? Are they going to stockpile euros or Japanese yen or, you know, Chinese RMB? You know, none of those currencies look particularly promising either. They've all got their problems. But gold is, you know, the only clean shirt that's not in the hamper with all the others. Gold is the best monetary asset for central banks to own because not only can it be created out of thin air by any central bank, but you don't have any counterparty risk. If you keep the gold in your own country, you don't have to worry about a default or, you know, inflation. You know, you've got the gold and, you know, you can't be sanctioned, you know, nothing. So that's a far superior situation than holding dollars and investing them in U.S. treasuries to get a low yield, but also leave yourself vulnerable to the whims of the United States to yank your treasuries out from under you whenever we decide that it's something that we want to do. So yeah, this is a problem for the U.S. government.
Peter Schiff opens by emphasizing that while he remains bullish on gold, silver is where he sees the biggest opportunity. In his view, silver is still dramatically undervalued when compared to gold, and the silver-to-gold ratio proves it. Central banks have been driving the gold rally for years, but Schiff believes the big moment for silver starts when retail investors jump in. With global silver demand hitting record highs in solar, EVs, and industrial tech, and mine supply staying flat, he says the setup is extremely bullish. Schiff points out that both metals have held strong despite recent volatility. Gold remains near all-time highs, and silver is finally trading above its 1980 and 2011 peaks, levels that acted as major resistance for decades. Breaking these barriers, he argues, is the start of a new long-term support zone, not the end of a rally. He then contrasts precious metals with Bitcoin. While gold climbed more than 50% this year, Bitcoin fell almost 40% from its highs. Schiff believes Bitcoin's failure to act as a safe haven, especially when measured in gold, destroys the digital gold narrative. Meanwhile, gold continues to prove itself as the world's only universal monetary asset. The global macro picture is where Schiff becomes even more concerned. Central banks are reducing their exposure to U.S. dollars and funneling money into gold because of America's exploding debt, rising deficits, and weakening Treasury demand. And with institutions like Morgan Stanley advising clients to cut bond holdings in half and move 20% of portfolios into gold, Schiff says this marks a major shift in global sentiment. If retail investors begin selling treasuries while central banks do the same, the Federal Reserve will be forced into massive money printing to keep the government funded. Schiff warns that this creates a dangerous spiral where inflation accelerates, the dollar weakens, and confidence in U.S. debt erodes. According to him, this is how currencies break, slowly at first, then all at once. For gold and silver holders, Schiff's message is clear. This may be the most important accumulation phase in decades.
And it's going to become a bigger problem as the bond market really starts to sell off and yields really start to back up. And the Fed is ultimately going to up the size of the quantitative easing. If it hasn't already started it started and, have to print more money to buy more bonds. And then the minute they do that, well, then they make the bonds that they don't buy that much less attractive. And so now more institutions, whether it's central banks or individuals, want to get out of their treasuries.
Yeah.
And now the Fed has to buy more. But that chases even more people out. So it's there's no way out of that spiral.
Yeah. What's your view on the big banks, the big financial institutions like Morgan Stanley? I mean, they pretty much suggested hey, cut half of your bonds and put 20% into gold. Do you see that as like a major shift in sentiment and the direction of where investments are going to flow?
Yeah, I think so. It's the first time in my career I've been in the investment business, I think, for better than 35 years. And during that time, other than myself, nobody really recommended physical gold who was in the brokerage industry. Certainly, if you were in the gold business and you were selling gold, you recommended it. But I don't recall a firm like Morgan Stanley ever telling their customers to buy gold. And now they're telling their customers to buy a lot of gold. 20% of the portfolio is a big number. And they're saying to take it out of, treasuries, sell your bonds and buy gold. And not an insignificant amount, 20% of your portfolio, basically unload half your bonds. And that's a big problem for the U.S. government because foreign central banks aren't buying. And now if individual investors in the U.S. start dumping half their treasuries, well, now who's left to buy the treasuries from the Treasury? Obviously the Fed. But that's very problematic because they have to create inflation, create money out of thin air and buy those treasuries so the government can spend the money.
Yeah. Yeah. It seems like why would someone want to hold the U.S. debt? We see that the deficits are sky high, national debt sky high. There's just, even unfunded liabilities are just unthinkable numbers. And so, and obviously if we look at how inflation has impacted, us or, even just the average person, we know that the stated inflation numbers are artificially low. And so,
yeah, well, that's by design. That's deliberate because the government doesn't want to report the actual rate of inflation because now, the Fed would have to do something about it. But they don't want that because, they don't want the rate hikes or quantitative tightening. So, I think they massage those numbers quite a bit. Not that there's a conspiracy to understate them. It's just that the design, the methodology for making the computation was flawed by design. So that when you put high prices in to the calculation machine, on the other end, low prices come out. And nobody really knows what goes on in there to turn a 5% price increase into a 1% price increase, but that's what happens. So I don't even put much stock in it. And, and not only do they understate how much the cost of living is going up, they overstate how fast the economy is growing. So those numbers are very suspect too, because if you don't accurately account for inflation and you just look at the GDP going up, you may conclude that it's going up because the economy is growing. but it may actually be going up because prices are going up, and that's it. And that's being driven by inflation.
Yeah. Okay, so back to an earlier point, I kind of mentioned the Fed, pivoting and stimulating into a bubble. We already have a AI bubble. Obviously Bitcoin, just fell 40%. But I'm kind of wondering, like, okay, how long can they keep this gravy train going? It seems like, when this bubble pops, it's going to be catastrophic. And so I'm just curious on your assessment of that. Do you think this is going it seems like it's forever how they just keep, inflating, even when the bubble, deflates some. And so
Yeah.
just curious in your perspective there.
Well, they're kind of committed here, where they've already got so much kind of in the pot that they just got to keep calling every raise, right, from the market. Because the minute they stop, that the game's over, right? Everything's going to implode. So they keep, pushing this, and eventually it's going to blow up because they're going to destroy the currency. That's what's going to happen, right? The dollar is going to fall through the floor, and prices are just going to accelerate rapidly. But the Fed is figuring, well, we don't know when that's going to happen. It may not be for a while, so who cares? Right? Somebody else might be in charge. There'll be a new Fed chairman. There'll be a new president. So what do we give a damn? Right? All we got to do is make sure that the wheels don't come off the bus now while we're all here. And so that's what they do.
If Peter Schiff is right, we're watching the start of a historic realignment out of paper assets and into real money. Central banks are loading up on gold, silver demand is surging, and the dollar is facing pressures we haven't seen in modern history. If you want to stay ahead of these massive shifts, make sure to like this video, subscribe to MetalWatch, and turn on notifications so you never miss a major update. Question for you: do you believe silver will outperform gold in the next bull cycle, or will gold remain the stronger safe haven play? Share your thoughts in the comments. I want to hear what you think.